Good morning, everyone. Welcome to TopstepTV. This is the London session. My name is Deeyana Angelo. I've been trading for around 17 years, and 12 years out of that, I've been trading futures, mainly specializing in crude oil and gold. If you're here for the first time, make sure to press like and subscribe if you find any value in what we're saying. Now, having said that, this is not a signal service or anything like that. It is for educational purposes only. Always follow your own plans. But we're going to have a look at what the markets have for us today. It looks like we had another one of those days where Asia has been pretty active. Somebody woke up and, they just started placing trades. So I can see that equities are shooting up. Crude oil fell out of bed. Gold on the run as well. Now, whenever that happens, I'm always a little bit wary of plowing into positions too early because I want to develop an understanding of what is happening first, right? Rather than kind of go, oh my God, let's go in. So I'm probably going to be waiting a while. I did try a little short around the ASR high on Nikkei, but it kind of just started shooting up. Whenever a price starts to creep into my position pretty much immediately, that's usually a very bad sign. So I tend to clip it pretty early. So now, I just want to wait and see what happens. But remember, this is like 25 ticks per $25 per tick, so managed to get it off very quickly. I am also looking at platinum as a potential trade. That's something that I did yesterday in my live account, and then I also had a pretty good trade on crude oil, which was on fast markets. Platinum is reaching a swing extreme today. So let's have a look at that. Actually, let's make this a bit wider. I'm trying out gray charts because I actually find black charts really difficult to read, especially with like the bright lights that we have to have. So sometimes I'm like, what is that color? And none of us are getting any younger. So I'm going to see whether this scheme is maybe a little bit better for me. And platinum needs a new contract as well. So it looks like it rolled to January. That's interesting. Is that an early roll? Let me just check something. Sometimes Topstep tends to roll commodities contracts a little bit too overzealously to the next month. Yeah, so I mean the contract has rolled to January by volume, but for some reason on the CME website it's still saying the previous contract is still saying October. That kind of introduces a bit of a problem here because I don't want to be, one of the few people trading platinum, and it's already a thin market as it is, so maybe I'm going to have to lay off of that. It's not that gappy, but it's not that great either. Like if you look at here, there's like a 4-tick spread between the contract, so that is a sizable gap. Usually I want to see about 1 or 2 tick spread, so that's not great. So I'm gonna have to lay off platinum because of that. What tends to happen is that if you are one of the only people trading the other contract, it just gets very erratic, and obviously the spread can just eat up your P&L very quickly. So we don't want to be doing that. So sadly, platinum is going to have to wait until next week. Okay, let's have a look at crude oil maybe. Crude oil went all the way down. It is consolidating. It has been consolidating for a couple of hours now. So I'm just trying to work out what is looking the most suitable for today. So one possibility in crude oil is that we're going to go and test somewhere near these lows. I have the average London session range low at 67.30. So I'm going to put that here. That's close enough. Where is the average session high? 68.75. So for now, London is still within its range, even though Asia was pretty active. And it exhausted the average daily range at 68.23. Now that could mean a couple of things. It could mean that we could have a single direction day down. So one of the strategies that I like to use is to look for some kind of a pullback and then to try and do that. But if we manage to find some price agreement around these Asia lows, maybe even do a little stop run and then reversal, that could be a pretty decent opportunity for us. I'm going to change time and sales to be crude oil. Let's see what ES is doing, but ES was also under a bit of a run. Trying to fail the auction at the moment, but again, we're at all-time highs. We have to be very careful when these things are happening because it's an unusual day, right? I mean, let me expand this and then we're going to go into ES chart. I mean, look at that. It's just going up, up, and up. So this level here at 58.24 is actually ADR high from yesterday, but you know that doesn't mean much because those algorithmic statistical averages are usually calculated for the current day that you're trading, and the current average daily range high is a little bit higher at 58.29.82. And we haven't gotten there yet, so there's no levels here. Yeah, 29.5. So let's just put that like this. And then the average session range for London is like all the way up at 58.53s. So that is something to watch out for. I'm just going to see what the option chains are doing. Yeah, we have some levels around here in ES, but again, I would like to see it at 58.29, 58.30 before I do anything with this. Another level of interest is 5800. That's where the previous sort of call resistance was, and there's some 0DTE levels as well. Valentino says, explain time and sales, please. Very simple. These are real-time orders coming into the market. Now, I usually like to use Bookmap on my other screen for that, where this is represented as bubbles. So big bubbles, smaller bubbles, it kind of tells you the size of the orders, but it also has a heat map that represents the dome. So for example, if you see on Platinum here, we have 16 contracts, and then smaller contracts, 3, 4, 5. So the ones that have bigger size will be represented as the heat map. And then if they start to bail, that's one piece of information. If they sort of stay and reverse, or they, you know, try and fill some orders around there, but not all of them manage to break through, and then reverse, that's something that we can take into consideration. But I'm trying to keep focused here on Topstep. I hear that they're building their version of Bookmap, so that would be very nice to have as an option. I don't know the timeline, don't ask me. You can look at the question mark, and then you can see the timeline of their planning, their plans, and their feature requests currently. So maybe let's see bookmap, and then we can see how far they are. Here we go. Add heat map, similar to bookmap and Quantar. So for now, it's just in review. It's been in review for 5 months. So yeah, this is maybe something for next year. I don't think they're going to be bringing this today or this year. Today, certainly not today. I'm still a little bit messed up from yesterday. I didn't really sleep well yesterday. Today I slept well, but the dogs woke me up like really early, so I've actually been up since 5 o'clock. And I kind of feel a little bit under the weather. I think everybody's got something going on in the whole world. I know that Hogue is a little bit under the weather as well. And it seems that I picked up something somewhere. And again, it hasn't hit me completely, but it's kind of enough to make my brain a little bit muddy. All right, so let me try and grab some of the levels, maybe for gold. Let's see what gold is doing. So I need to have a look at, again, the option chain. What contract? We're in December, okay. Let's grab that. Now, what is the relevance of option levels and stuff? It's there when the market makers are looking to fill their positions, and they will typically get involved around areas of high liquidity and try to drive the prices either to those levels or away from them. So it's why it's important that these days we evolve with whatever's happened since COVID, and to actually try and take in that information. All right, so on gold, let's have a look at gold. On gold, I have some levels up at 2,700, and then some average ranges up at 2,711. So that will be the expected upside for the day. I also have a sort of intraday level of interest around 2675. And also something down at 2600s, which for now is the average session range low. But again, we're opening with quite a big gap. I can see we're moving into the upside auction, leaving single prints. So maybe we can try going along with that. How far are we from all-time highs? Oh God, it's just there. Yeah, everything is just in a bullish trend. Like, this is so odd. Usually gold used to go the opposite way to equities, but here we are, equities on a high, gold on a high. We've got twilight zone. So for gold, I would be expecting the single prints to stay. We now have a little bit of an overlap in candles. Like, if I had the TPO charts here, I mean, I have them on the other screen. I'm just going to show them for like 3 seconds, just to show you what I mean. So this overlap, these are my indicators. So this overlap on the TPO profile means that we have single prints, so there's a bit of a gap. If that stays, we can then use that to limit risk. Now, if we get down to the initial balance, there is a, which is this red box, there is a danger of a failed auction. So things are not exactly clear just yet, and we seem to be seeing some weakness now. So if the single prints stay, I can run along on the back of that. That's one way to limit the risk in a directional move. And if they start getting chewed up, it means that we're losing power and it's not as strong as we imagined. But maybe I can go down. I'm just going to mark where the edge of that single print is. And then what I'm going to do, ooh, what's that? I can't even see that. Just need a regular horizontal line. There we go. Okay. And that is edge of single print TPO. And now what you can do in this situation, you can go down to something like 100 tick charts or even Renko or anything that can just give you a very quick signal that you're rejecting off of that. And you can try and run your feeler trade of whether this can actually turn into a trade. But we do need some sort of a buy signal, so bullish engulfing of some sort. Right now on the 100 tick chart, we are sitting below all of these 3 EMAs, and that's not great for further long. So we really need to see this push a little bit higher, at least above this middle one. And then you're looking for further breakout, further higher high above 26.93 if you're going to run that directional trade into the levels towards 2700s, for example. So for now, we're not getting that. This is how you kind of stay out of unfavorable moves. So you have something from a larger time frame. I take the 30-minute chart, but I also obviously look at the very large time frames. Every day I start with the daily chart, weekly chart, 4-hour chart, 30 minutes TPOs in profile. And then if I'm running a directional move, sometimes I will do this to front run a trade idea. But even that front run of the trade idea still needs to have a trigger signal. And right now we don't have it yet. All right, let's have a look at some questions. Verti said, Marcus Tokadi, at the Asia high and low on the 30-minute chart on crude oil, how long ago were those highs and lows? The Asia high and low on crude oil. Okay, let's have a look. I mean, the Asia low was roughly about 3 hours ago. And Asia high, I mean, that was pretty much like I think 2 hours into Asia, right? So 7-8 hours ago. So the high is 70, Asia high. Asia low is 67.16. And right now, that's not coming into play, right? But if we go down to take out Asia low, that's the nearest area. That could be a stop run through the previous session lows and then a reversal. That's something that London likes to do a lot. And for that matter, that's what New York does as well, especially on equities. So you would frequently see these moves that sort of open inside the range, so we don't make a higher high at the open. But then during initial balance or during the first 90 minutes, they ultimately take out the high or the low that is the nearest, and then they reverse. So that's one of the things to watch out for and to not get involved in fake breakouts. You can recognize a fake breakout if it happens on lower volume, for example, but then you also see the reversal right after, right? Okay, so we're still fading that single print on gold, so there's no trade there yet. Just have to be patient. Former all-time high is at 26.91.9, and that's not giving way. It's not opening up a path to run any longs. It's actually showing weakness there. So if anything, maybe we can have like a failed auction. In that case, we would need to see the price on a 30-minute chart closing below 26.90 with quite some conviction and no wicks. So that would be like hypo 2. One of the problems with that that idea contextually is that we are at all-time highs. Like, do I really want to be fading this like at all-time highs? Because I know that that never ends well, at least not for me. So I would prefer to sit out that move and then maybe catch it from some of these gamma levels at 26.80 and even 26.57 if we can get it. But yeah, that's not a wise thing when you're trying to fade all-time highs. I've known lots of people who tried doing that in equities during the bull run, and they just completely lost their shirts. I mean, you can be a contrarian, but then being a contrarian one way is when you are taking in the information and you're maybe using statistical averages and you are using some pretty firm clues that the price is actually reversing and failing the auction. That's one thing. But if you're just going to blindly go against the move and keep shorting in light of any old pullback, that's the bad way to do it. People say that I'm great at catching tops and bottoms, and that's because I look for very specific things when I'm about to call a top or a bottom. So it's not that, we got a crystal ball. I use data a lot in my trading, and some of these average ranges that you see on my chart, they are projected averages based on whatever the market has done over the last 10, 20, or even 40 days. And when the price starts reacting to them, that's the time to pounce. But for example, I could have done a FOMO here and gone, oh, ES is turning away before we reach the ADR high, let's go in. But I don't like doing that because look at Asia. Like, this is not normal. Like, what is this? And what happened with yesterday? We were looking for a breakout, and then here is the session that we were trading. Look how choppy and pathetic that is. Like, so I can't help but think that maybe they're trying to keep the volatility of equities contained ahead of the elections, and this is why it's been muted. I mean, last week or two, this has been I mean, look at this is a mess. And then we have very lovely extended moves. You can see which ones are the main session because the candles are bigger, obviously, because we have more volume. That leads to more extended moves. But yeah, I mean, look, so this is Asia. A little bit choppy, but generally, on the way down. This is the main session. Like, what is that? Why? And then again, prior to that, we had London. Nicely. So is this algorithms, or, are we purposely trying to keep equities contained during the active trading hours? We have to ask those questions, because that's what it looks like to me. And then when the algos are off, we do what we're supposed to do. Yeah. So I don't know, man. It's been an odd year for sure. There are some practices that I've not really seen happening to that. People say, oh, markets are manipulated. Of course they are. The whole interest rates and stuff, it's about managing the cash flow of the country itself. But manipulation is one thing. It can actually be a very good thing for us because they want to drive prices to certain levels. What's not good is if they are trying to keep prices contained, because that's not a day trader's market. If you see something like that, you'd be better off just doing options that are designed for market neutral days, right? So you could maybe do like an iron condor or butterfly or something that is created for neutral markets. This is the thing that I was talking to some people about when we were in a trending market, especially when we had like COVID, and they were like, oh, I'm using iron condor option chain. And I'm like, why that's designed for market. Like, what are you doing? You're effectively using an option strategy that is completely unsuitable for the market state we have. It's like, can we please just match things properly before we start, using things that we don't know much about? But just beware of that. That we do have some weird stuff going on with maybe algorithmic activity that is purposely trying to keep equities contained. So yeah, it's certainly intriguing, right? Verti, so it is just the previous session, to get back to your question. So whenever I'm looking at, so okay, let me just make this completely clear. When I'm looking at the value areas, I don't mix and match sessions. So it will always be comparing London to London, NYMEX to NYMEX. But when it comes to these stop runs through previous sessions, that's when we use the previous sessions that is the nearest. And sometimes it can be that London has a high that is contained inside the Asia high. In that case, we will just call that the overnight high and use the Asia as reference. There are times when we move vastly away from the levels, and obviously then looking for example, on ES, looking for smash through Asia low as a reversal. Well, that's never going to happen because that's all the way down here, right? Like, it's going to take, even if we do get there, it's going to take many hours of a very, very large trend day to get there. So that's not the option. But what is an option is to take the high that is quite near. So we take the high, and then we look for a smash through it and a reversal. And I can argue that that's exactly what's happening right now, right? We had that run through the Asia high. So we opened very near it. We smashed through it, and now we're trying to reverse. That could be a setup. But one caveat here is that we need to have a reversal that actually falls back into that range. Right now, we're still reacting to it. Yes, we had a stop run, but unless you're like a hyper scalper, you would have, probably sat that out, because you want to get the full failed auction if that's what we're looking at. I mean, but now the whole range is just so small. So until the previous session starts showing weakness and effectively accepting the prices, that's not a setup. This is still an uptrend. So we still need to see that commitment of reversing and sustaining into the previous session range. So that's how I would look at it. Will Black Swan says, Dee, how can I trade the FTSE from the US? I trade the DAX bond and stocks, but can't get the FTSE on my platform. That's the London Stock Exchange. That's yet another exchange. So you have Eurex, which is what the instruments you're using are located on. So DAX bonds, bubble shots, Euro stocks, that's Eurex. However, London has its own London Stock Exchange, the LSE, where you will find FTSE. So that's a separate data feed that you need to pay for, and then you can have it on your platform. I prefer DAX over FTSE, I won't lie, because somehow I never really gelled with the London index. I always found DAX to be a lot more suitable for intraday, but I know that Tom Hugard, he trades FTSE a lot, so yeah, so there are people who like it. Joe says, where do you find options levels? Well, you can look at option matrices, but I like to take them from a company that I heard about from Anne-Marie, actually. It's a company called MentorQ. And I'm not like affiliated or anything. It's just I like the fact that they have digested some pretty complex data and they put it in lines on the chart. So you do have to use a query bot on Discord every single day, and then to effectively just plot them on your charts and see how they relate to your method. So for me, they cannot be just singular levels because there's a lot of them. They have the gamma exposure levels. They can sometimes be very, very dense. So, you can have them almost like every 15 points kind of thing. So that's not very useful, but I like to concentrate on the areas that I know are reactive, and then I would look for confluence with the call and put levels around there. Sometimes you have like high volume areas as well that could either act as reversals or a springboard. But again, I like to match that up with something else. So if I don't have anything around there, I'm very uncomfortable just using that. So I need to have an outer value edge, for example, or you know, if we have already reversed from somewhere, maybe to trade towards a high volume area, and that's how, you know, that's how I use it. There's like a million other ways to use it. Pretty sure Nick for a Tick uses those levels to scalp. Now, I'm not a scalper. I like my big D style trades. And, you know, you're not going to get those every single day. So you have to be a little bit more selective. I mean, I say you're not going to get them every single day. Crude oil likes to do the failed auctions quite religiously, nearly every single day to a rate of about 77%. When we're looking at like a year or two of sample size, even longer, like, you know, I've seen it happen so many times. So on crude oil, we're still seeing some big buying happening. So that might be that reversal. I've been like tracking what's going on here. And every so often you see a big order. So 15, 15, 22, 22. This will be the same people because it's the same price, right? It's 68.37. So maybe we can like get above the initial balance and VWAP, which is right around there. That could be a long reversal long. Should we try one trade as an idea? It's only a combine, so who cares, right? Not that you should be looking at combines that way, but yeah. So I'm going to use a 35 tick stop here, and maybe just aim for a little trade. Now this would be my version of a scalp, just going to take him 40 ticks out of the market. And with the scalping, like, it just doesn't match my personality. I'm a pretty, you know, driven person, but the older I got, the less inclined I was to run a stressful type strategy. So, and when I say stressful, with scalping, you have to always maintain a high accuracy, and then you have to be very quick with your reaction times to actually take it off. I found the older I got, my reaction times are much slower. So these days I gravitate towards instruments that are much slower moving, and I can, you know, take my time. I can decide what I want to do with it. I was a lot crazier when I was younger, but, you know, we can't stay young forever, so it is what it is. You know, you get to your mid-40s and things start breaking down. Okay, so Joe also says, Dee, why are you not considering IB range extension trading gold and equities? Well, I just explained that. First of all, we're failing the auction on ES. So, you know, Asia high smash, reversal, failed auction. Is that a good setup for a breakout trade? No. Not everything is going to be a breakout trade, guys. Breakouts fail. Like, I don't know why people are so obsessed with momentum trading. All right, that VWAP is giving us jip here, so I'm going to close this. I don't like to see this. I was looking for the market to gain traction through VWAP this time. Didn't happen. And it might happen at some point, but that was not the right thing. Again, it was a feeler trade. It wasn't like anything that I was going to hold forever. But yeah, so let's have a look at, what did you say, gold as well. Oops. Let's need to actually click on the symbol D. Yeah. And then gold. You know, we had a single print that I was talking about a minute ago. I don't know when you joined the stream, but let's do that again. So we left single prints upon leaving the initial balance, right? And right now we're building structure. This is not what you want to see in a breakout, right? You want to see a little bit of an overlap with the previous candle, which we had when I first started the stream. And then I was looking for an immediate move up. And I was using a 100-tick chart for that. And I said, well, around about wherever this was. Let's see the time when I started. Yeah, so I was looking for a further move up somewhere around here. This is where the single prints were. And look what happened. So we couldn't even get above the first, this EMA line, which I use for timing, let alone actually get traction into a new higher high. And then since then, we went all the way through that area into the single print to close the gap effectively, and now we're reversing. Is that what you want to see from a breakout trade? No, you want to see higher high pretty much now, and you want to see very little overlap between the previous candle and the current candle on a 30-minute chart. What do we have? We have a big overlap. Look at that. So this is how TPOs work, right? So I'm going to remove this just to show you what I mean. So single prints were left behind. Let's get a little rectangle. Single prints were left behind when this candle went up, closed, and then the next candle opened. And then we were sitting on a single print that looked like this, right? There was a gap. It's a little cave. What you don't want to see is the market building structure for a directional move. So you do not want to see this big overlap into the second candle. You want to see the market maybe make a little bit of an overlap, make a higher high, and sustain above it. What happened? Tried to pop up, started reversing, and now we're building structure. This is the third 30-minute candle where we're stuck in a range. That's not good for a breakout. That's not good for a directional move. So you telling me, why are you ignoring the breakout? This is not the breakout. This is possibly a fake out. Do not want to get involved. I still think that crude oil, what it's doing, building structure, having a consolidation on a 30-minute chart, trying to glue itself away, this is a better opportunity. But longing here, no. We built structure to the wrong side. So that's how you use TPOs to keep you out of trouble. As you can see, it's not all about finished 30-minute candles, because I don't need a finished 30-minute candle to see that we're building structure here. That's a real-time event. It's not a lagging event. You can see it, right? We had single prints. We started closing them. What happens? We fall further. You know? Or rest. I don't know whether I'm reading that correctly. Hi Dee, you probably answered this a million times in the past, but do you always prefer pullback before entering position, or are you a breakout trader? I am all of the above. So after you've been trading for 17 years, you stop thinking in terms of, what am I? Am I a momentum trader? Am I a reversal trader? Am I this? Am I that? As an intraday trader, you have to be specialized in all of those, because they're all market states that you have to learn to deal with. I would say that in the beginning of my career, I was probably more a reversal trader, because I am a contrarian by nature. I go against everybody in my life. Somebody tells me, you can't do that, that's impossible. I say, thank you for your input. I'm still going to do whatever I want. And that's, you know, something that I've done my entire life. And if I had listened to the people around me, I wouldn't have achieved anything in life. I certainly wouldn't be moving out of the country, being in the Olympic team as a gymnast as a child, being a musician. I did that for 20 years. Everybody told me that's a career where nobody makes it. And yet I made it to the Rod Stewart band, where I was his sax player for about 2-3 months out of the people that you would know. That was like highlight of the career. But I would have never done any of it if I had just gone, doing whatever other people wanted me to do. So I am a contrarian, and by nature, I will be looking to fade something. So rather than looking for a pullback, then going in or breaking out, I'm actually in the middle, right? I actually look for reversals from logical areas, but in order to get that reversal, I need some stats, I need data. I'm very data driven. So I won't just be going, oh, it's gone up, let's short it. Or it's falling, let's go long. So I'm not a lunatic. I am, I use a fairly kind of sophisticated set of tools to make me go into a reversal trade that has merit at certain levels. And this is why I think I've developed some notoriety that I'm somebody who can call tops and bottoms, but I don't see it that way. It's not like, oh, it's going to reverse there. I look at it and then I follow what price action is doing, and I'm very flexible. I'm very open to whatever the profile is doing and what the price action is doing. So that allows me to stay objective and to bail early when I don't see what I want to see. Like, for example, prime example here, I wanted to see crude oil immediately going above VWAP. It didn't do that. So instead of holding on for a full minus 35 ticks, I only took a little bit of a loss. And yes, it might work out, but that's not what I was looking for at the time. I'm happy to get involved again, but at this point now I need to see a close above VWAP before I get involved again. So that allows me to, again, maintain that flexibility, flexible bias, and not get married to any particular trading idea for too long. Having said that, I'm very good at swing trading as well. So I can find a big reversal area and I can hold the trade until the cows come home. That's never been my issue. But I don't like to define myself as this kind of trader, that kind of trader. I will be everything depending on what my chart is looking like, right? If we're in a directional move, if we're exhausting all averages, if we're leaving single prints, generally I won't try to fish for reversals. But if we are or again, third story, if we're in a range bound market, we extended the initial balance to both sides. Technically those are reversal setups, but they have a different way to, it's a different execution. So that's another strategy. But you're not going to come by all of that and honing each and every one all at once. I think this is the problem with trading, where people come and they either marry themselves to one type of trading. Oh, I'm a breakout trader, I'm a momentum trader. Great, but what do you do on all the rest of the days, because the markets actually are range bound for 56% of the time in equities? Do you sit them out? Or do you continue to trade your accounts expecting breakouts and then ramming them into the ground and then starting the whole thing over and over? So what would be a better choice? To keep doing breakouts or to get better at range trading? So for me, at some point I sucked at range trading and I was like, I need to really tackle this. So I actually spent about 4 years working on getting better on days when we're inside value and waiting, being very patient. I'm always on the defense whenever we open inside value, because those types of days means that the market is in balance and there's no breakouts to be had. So it's better to wait for more data points, more information. And data points, what does that mean? Well, typically it means extension of the initial balance on both sides. That's not going to come within the first 90 minutes. So you have to be very, very patient. This is why you hear Hogue saying, we are opening inside value, inside range, we're in balance. It is likely that the good trading locations are going to come in later in the day. That's what he means, right? He means we need more data points in order to lean on some of the session highs and lows that get created later in the day. But still it took me 4 years to get better at that, because I wasn't naturally a good sort of scalpy, snipery type trader. So I needed to work on that. And these days, when I see a range-bound day, when we do have those extensions on both sides, I will trade off very low time frames because you need the accuracy, timing, precision, all of that, patience, of course. And that's the secret of range-bound trading. I also had to modify my profit targets on those days because I like my big sort of 1.5, 2 Rs, 3 Rs, 4 Rs. But again, on range bound days, you don't have that typically. So you have to do like 30 ticks here, 40 ticks there, 30 ticks there, 20 ticks there. So typically on range bound days, I will do more trading, but I will still maintain, some semblance of a reasonably high risk reward in that space, right? So for example, 1.3 hour on a range bound day, excellent result. 1 hour, I would say, yeah, okay, but it's more of a buffer trade for me. So I don't like to put myself in any sort of a, stereotype, oh, I'm this sort of trader, that, because I've been doing this for long enough to not need to do that. But if you're not there yet, I would probably say that you need to tackle each of the categories of the trade types: breakout trading, reversals, range bound. You need to tackle them at one at a time. Don't try to get better at all of them, because that's never going to work. It's kind of like trying to stop smoking, get fit, have a child, move house, like all at once. You're going to fail. So we take one skill at a time, work on it, level it up, keep working on it, add another one. Okay. JF says, morning, Deeyana, how many points stop loss you normally give when trading GC? That will heavily depend on what sort of this is where data comes in. It will heavily depend on how big of an average range we have. If we are sitting at like 300, 400 average, I will give it probably about 55 ticks, and that means sizing down, right? If you see that range fall to about 220, 180, 160, then I will be using 30 to 35 ticks. If I'm trading on a range bound day, though, I sometimes manage to get some opportunities where I only use about 15 or 17 ticks. But those would be rare, especially this year. Gold has gone on a bit of a volatility exploration. So at the moment we're sitting at about 275. That would mean, yeah, about 30 to 35 ticks. That would be for me. And then I usually aim for a default 2R. So 2R multiples, 70 ticks. But sometimes I will definitely I will take it off if we're anywhere near that and the price starts messing around. Like yesterday I was aiming for 70 ticks in crude oil. I took 64 on fast markets, and that's a pretty good result. I was happy with that. So again, not being a something for a tick, but just going, that's all right. Hogue calls it the 10% rule. I actually have like a twist on that. If I have a target in mind and it gets to 75% to the target and then it starts messing around, I give it 3 minutes to reach the full target before I take it off, wherever it is. So that way it kind of keeps me from holding on to trades into what is then a negative risk reward, because if you think about a trade, what do I need this? So let's hypothesize that I went into a trade in crude oil, and it was, somewhere down here. Can I change colors of this? Let me just adjust this for a second. Yeah, so let's say, you go into a trade, and now, let's say you're shooting for the average session range high, right? And then you kind of get up here. So now you're effectively a fraction of the trade away from your target. So that becomes a negative risk reward at that point. Now you need to work with statistically viable targets, so over 1.3 in order for this strategy to work, because that gives you some room to take the trade off and still be within those statistically viable waters, meaning that you don't need a super high accuracy to remain profitable. That's always been my cornerstone of trading, for stability and low variability and all of that. But basically, when you get up to the final part, what you're doing is you're effectively flipping the risk reward. And so think about this. You're effectively risking all of this You're risking all of that in order to gain that. So at that point, when you're in so much profit, the whole chasing the final fourth of the trade, it becomes a negative risk reward activity. So I don't like doing that, which is why if it gets anywhere to 75%, I'm happy with that. But at the same time, I do aim for 2 hours, which means even if I take it off at 1.7, 1.5 hour, that still puts me onto the positive risk reward. And, you know, you only need like 35, 37% accuracy. You don't need super high accuracy. And the whole system is a lot more stable. I maintain accuracy between 43 and 53%, with some of the times when my accuracy has gone up to like 69, 70. And sure, we all have days when we're smashing it, but that's not very realistic. I've had days when my entire week I'm like 80% accuracy, but is that viable for a larger sample size? No, absolutely not. Especially not when you're looking for larger opportunities. A, they don't come that often. B, you're not going to be as accurate because a lot of them won't quite work out the way you imagine. So, you know, we have the trader math. But yeah, so this is the way I look at it. Once your price gets into quite a bit of profit and you're aiming for statistically viable target, once it's up at the final fourth, I look at that as chasing the final fourth as a negative risk reward. So keep that in mind, you know, food for thought. Jason Thompson says, where did you get the options info from, and is it free? It is not free. Most of the services that I use are not going to be free. But I do get them from, I said before, from Mentor Q. I found out about them from Anne Marie, and that was very helpful. You can look at options chains, but they can be very cluttered, and there's a lot of information there. So you want to find a service that will digest that and put it in some kind of a visual representation that doesn't have a million numbers. Because, you know, whilst I was a spreadsheet queen, that was many years ago, these days I look for automation and simplicity in my trading when it comes to charting. And even on my main charts, you know, you don't see too many things on there. You know, I have about 3 main things that I look for, and that's it, you know. Lazy Lion says, what are the specific times for session volume profiles in GC with session overlap in mind? Okay, so I don't do the session overlap, right? I cut off my profiles at the start of the next session. So that means for gold, we have COMEX. I mean, if we're going to be purists, COMEX used to open at like 8:20 back in the day. But a while back, they all sort of agreed. So it basically starts an hour earlier than the main New York Stock Exchange hours. So it used to start at 8:20, which that's Eastern time. But because most platforms, when we went into electronic trading, could not start a new candle at 8:20, they all sort of agreed to start COMEX at 8:30. So that's what I use. So I basically start London at 8 o'clock my time, and I cut it off at 1:30 p.m., which is when COMEX begins in my time zone. And similarly, if you have Eurex and London overlapping, I will start everything at London. I don't really look at Eurex much because it's such a small exchange. I do use it for a fake direction. I call it the Frankie fake out because it's a Frankfurt exchange. And the Frankie fake out means that you take out the previous session, exactly what I was talking about earlier, and then you effectively fade it during the first hour. that's a play that I sometimes do on oil when we can get it. But in order for that play to happen, we need to take out the Asia low, which hasn't happened today. So that setup did not come in. So yeah. And then for volume profiles, I look at not just a single session. That's how Robert trades. I prefer the TPO profile for the single session. When it comes to volume profile, I smush them all together and I look at the overall thing of like where we were, what happened, where the low volume areas are. Like for example, on crude oil now, one of the other reasons why I'm looking for this average session range high to start happening is because we have this whole volume area here. Like from Asia trading, that was all done on low volume. So if we can get above this bloody VWAP that has been causing trouble all morning, and again, you know, we had nice trending move during Asia. We come to the one of the main sessions. We have Brent crude oil, which is heavily correlated with WTI. And we just consolidate. Like, why is this? Come on, guys. Come on, boys. Wake up. You know. However, if we start to get above 68.46 into that low volume area, I would expect us to start tracking pretty quickly through the Asia move. So that's kind of my plan for the day. Now, there is another thing that can happen where the low volume areas can act as resistance, right? So if we come at it from underneath, we are not able to sustain into it, and then we reverse. That would open up a possibility for some further downside. And, you know, we still have that Asia low that we kind of left hanging up for grabs at some point. And let me look at some options levels. And then we also have a level all the way down at 65, like literally nothing in the way from there. So if we cannot break through into the low volume area at 68.46, 68.50, nice round number, I wouldn't be surprised to see this like sort of 200-300 points lower this week. I really wouldn't. And if we look at the daily chart, what that looks like, that's right into the low of this swing point. So again, even from a swing trade outlook, returning to a previous area of demand is something that the markets do a lot. And then do we reverse again from this area? Remains to be seen. But those are some levels that I might use as kind of big orientation points. Dennery says it would be great if you got Trader Tom on some morning as a guest. I would love that, but you know, I think we reached out to him. However, I don't think he's kind of committed to come on TopstepTV. We actually wanted to have him on to talk about his journey and stuff. But yeah, that would be a dream come true, actually, having Tom Hugard on here. I actually inadvertently, like, you know, the whole like, what is it, 6 degrees of separation? Well, I'm actually a lot closer to him than that, because I know the guys from Trade Day really well, and you know, we've even done podcasts together. They were on my channel, and yeah, at one point they actually started working with a psychologist that closely works with Tom Hugard as well. So that's kind of interesting. But yeah, if we are going to get Tom Hugard on, you know, we need to get Topstep to try and give him a poke again to see if he would come and join me. I do think that Dakota, it might be joining me on some days. I don't know when that man sleeps. Because we were just chatting. I had some questions about Nikkei for him, and then he was like, "Hey, maybe I can, you know, join you for London at some point." And I was like, "Aren't you like asleep then?" But yeah, it would be nice to actually get Coach Dakota to discuss some Nikkei trading for us, because I think Nikkei is a great product for London as well. And you know, in a way, these are slow markets too, right? London is generally a slow market for a lot of the products that we're looking at. until we get DAX. So we'll see. Servant Thought said, is that the product mentor Q option matrix? Yeah, so that is it. But they do have different things. They even have like their own strategies and stuff. They have models that are heavily based in data, and you know anything in data related and rooted in data. I'm very, very much into that. I gravitate towards any system that is rooted in data, because that's how I do things as well. Having said that, this year I think I've gone more discretionary for various reasons, and I need to pull it back and just start going back into my systematic trading, and I'm working on that. So you know, it's a never-ending story. All right, guys, I think that's going to be it. I'm going to finish it here. I am going to be on for Market Stalking with Dee today at 1 p.m. Central, which is 7 p.m. my time. Until then, make sure you preserve your profits. It is Thursday. You know, we're kind of coming into that end of the week where we need to start thinking about preserving profits in a bid to pay yourself, obviously, because that is the point. And yeah, until then, let's take it slow. Let's see what the day brings. It certainly started off with a bang. Yeah, so I will see you later on. Thank you for hanging with me. Press the like, press subscribe, and I will see you later for Market Stalking with Dee. Take care.